Welcome to X-CEPTION, where we execute the edge. I'm Nyra. Let's start from the top, the daily. What you're looking at right now isn't just a move, this is sustained pressure. Day after day, higher closes, controlled structure, no real breakdowns, no real panic, just continuation. But here's the problem. Moves like this don't stay clean forever. The longer price trends in one direction, the more it builds imbalance, and the more dangerous it becomes for late entries. We're not early anymore, we're late in the move. Now let's drop down and take a look at the hourly, zoomed out. Now you can see the structure a little clearer. This isn't just a straight line up. We've had pauses, we've had consolidation, but every pullback gets bought. That's the key. Buyers are still in control, but they're no longer chasing, they're waiting. And that's where the shift starts. Because once a market stops moving clean and starts stepping, that's where traps begin to form. Now let's zoom in and break down just this past week. This is where it gets interesting. Look at the behavior here. Push, pause, push, pause. No real follow through in the middle of the week, just rotation. That's not weakness, but it's not clean strength either. It's controlled. Now let's shift out of structure and into execution. First, ascend, clean, structured, disciplined. This is exactly what a controlled market rewards. You're not chasing, you're not guessing, you're letting structure form and taking what's there. That's why this works, because it aligns with behavior, not prediction. Now let's look at EV Pro. EV Pro thrives in movement like this. Trend, continuation, controlled pullbacks. That's its environment. And you can see it here. Consistent entries, structured exits, no chaos, just execution. This is what happens when the system matches the market. And finally, crossfire. Now this is a different beast. This isn't trend continuation, this is adaptation. When the market slows down, rotates, compresses, crossfire steps in. It doesn't need perfect conditions, it just needs opportunity. And that's the difference. Different tools for different phases of the market. Now let's shift into what actually drives the next move, the catalysts. This week is loaded. CPI, PPI, retail sales, unemployment claims, these aren't background events. These are market-moving triggers. And when you combine that with a market already sitting at highs, already compressed, already building pressure, you get expansion. That's what this sets up. So here's the reality. We're extended, we're compressing, and we're heading into catalysts. That means one thing. This market is about to move. The only question is, who gets caught on the wrong side of it? Don't chase, don't guess. Let it show its hand, and then take it.